Hi everyone, hope you're all doing well, and today we're going to talk about the stock market crashing again, or the stock market crashing again according to YouTube. Because realistically, when we look at what happened in the stock market last week, we went down 2%. All of a sudden, everyone's talking about a stock market crash. What happened to the rest of the week? It recovered it, and we were back up to where we're at, and no one talks about a crash again. Same thing has just happened again this week. The first couple of days, we had a bit of a rough day. The stock market was down 2%, and everyone's going, oh, pulling out the crash card. Oh my goodness, it's crashing. Like, okay, come on, calm down. Let's just talk about this once again. And yeah, I don't know what it is at the moment, but every time we have a stock market that drops 2%, which is absolutely normal, maybe we've just forgotten what a 2% drop is because we haven't had one pretty much since like 2019 really. The stock market's just gone in a straight line, and for some reason every time we get a 2% drop, everyone starts saying, oh, it's crashing again at the moment. And it's like, hold on, let's just have a look at this seriously and talk about the situation. So hopefully I'm going to talk about this today and kind of get rid of some of these myths about the stock market crashing at the moment. So hopefully the video is useful. Sorry there wasn't a video yesterday, just one of those days at work. It just got massively busy and I didn't have time to record. You know, it's one of those where you think, oh, that's it, I've got time to myself to now sort something out, and then another problem comes in. It was one of those days. So yeah, apologise for no video yesterday, and I'm sure some of you guys might want to see a boohoo video tomorrow maybe. We might do that, let me know in the comments. But yeah, we'll get onto this at the moment. So yeah, the stock market once again had a 2% drop, and everyone's panicking about a stock market crash. Now realistically, 2% is nothing. That's like one normal day. You know, if we have a 2% day for 10 days in a row, then we'll start talking about a crash. We'll pull the crash card out, but at the moment it's not a stock market crash, and that's the big thing to kind of get into reality, is that we are having a 2% drop. That is nothing. We will have probably another 30 of them next year. It's just that we've had a stock market that's gone up, that everyone's got used to a stock market that when it goes down, it only goes down like 0.3%. And like I said, last week we had a drop, it recovered it. This week it's been a little bit slower to recover. It looks pretty strong in pre-market at the moment, but we'll see where it goes. You never know, it might give it all back like yesterday. But first of all, don't panic. You know, it's only a little small dip. When we start dropping 10-20%, then we'll start being a bit more serious about the whole situation. But at the moment, yeah, there's a lot of fear being pushed out there, and realistically, all that fear that's being pushed out there, it's no good for anyone, because when we actually get to a proper dip, then obviously I don't know what them people that are claiming crash are going to do, because it'll be a lot uglier than that. And as well as people that get involved in the stock market, obviously that's just going to, you know, create fear to you. So just try and ignore all that, because you shouldn't really panic about it. Even though when you start seeing so many things start selling crash, you start going, oh, you know, start worrying yourself. You know, don't worry about it. There's a lot of people out there just creating a lot of fear really. So overall, first of all, it's just a small dip in a long scheme of things, especially when you look at the S&P 500 over the last few years. Next thing, views. Now the big thing is why you see a 2% dip and everybody jumps on that is because we haven't seen one for a while. And also the thing as well is, like, a lot of people are pushing this, whether it be the media will push it. You know, the thing is, how does the media get views? Is by pushing negativity. If everything was happy, you won't go watch the news channels, you won't buy the newspapers. All you need is to push out some negativity, people come watch. It's the same on the YouTube scene. Everyone here is kind of battling away for views, and the way to get views is to exaggerate things, talk about negative things, make things look worse than what they are. And that's the big thing you got to be careful of. There's a lot of people out there on the YouTube scene at the moment that are more bothered about getting views rather than actually giving good information for you to take on board. And that's the thing, is if they could put out a video going, the stock market's crashing after being down 2%, unfortunately there is a lot of people that will click on that video, and hopefully they don't make bad decisions off that, but it will happen by watching that video, and that's no good for anyone or the investors that are watching that. So first of all, just be careful out there. People will be pushing this agenda of a crash out there because they will want your views. So yeah, just be very careful of that point of view as well. And also, cried wolf. You know, so many. Last week we had a stock market crash. This week we have a stock market crash. Apparently there's so many stock market crashes going on now. Realistically, we only have a stock market crash, I think the average is like every 8 years at the moment. It keeps going up. We don't have crashes that often as much anymore now, because every time we do go down a little bit, the Fed just gets the printer out. So yeah, we don't really have too many crashes, and every time we go down a bit, everyone keeps going, it's crashing, it's crashing. And it's like, no, you know, when we crash, we will crash pretty hard. And yeah, there's everyone, you know, crying wolf about a stock market crash. And this is things like, there's so many people out there that keep going, oh, it's crashing, that eventually when it does crash, they'll go, I told you it was crashing. It's like, yeah, but you were wrong another like 100 times saying it was going to crash as well. So, and I actually saw a very good image from Paul Briscoe that actually put out an image on his YouTube channel, and I thought that basically sums up this cried wolf is that you keep saying there's going to be a stock market crash, and every time it doesn't end up to be crash. But yeah, it was it made me laugh. It was a really good image. And realistically, when there is a stock market crash, everyone kind of goes, why is it crashing? People look for reasons why it's crashing, and generally there's actually quite a few reasons out there why, and I shouldn't say why it's crashing, why the stock market took a 2% dip. Why did the stock market take a 2% dip? There was a few reasons out there. Obviously, we've still got the Evergrande situation hanging over us and what's going on there. There's people worried about who's invested in that. Are they going to go bankrupt? So I guess that's kind of hanging over the stock market. A few people are saying China. Obviously, you've got this situation, but also China have been pretty harsh to a lot of their companies out there at the moment. And if you are a Huya shareholder or an Alibaba shareholder, you will be able to confirm that right now. I'm actually thinking about making a video on Huya. Like I always get asked, like, can I do an update on it? And I always go, I can, but literally the video that I would make is the same video from like a few weeks ago, where I just go, it's a solid company and it's just, you know, hated at the moment. And yeah, I'm kind of thinking about making a Huya video, but at the same time thinking I might end up repeating the same information, I guess. And the 10-year yield, treasury yield. So a few people were worried about this. Personally, for me, I have never bothered with it. It was only a couple of months ago where people were saying, oh, it's too low, and now it's too high. It's like, it doesn't make a difference. You know, it doesn't make a difference in my opinion. And a few people were pointing that one out. Powell, Elizabeth Warren, they got into a bit of a fist fight. Well, not a fist fight, but an argument the other day as well. And Powell, once again, whenever he goes to talk, the stock market goes down. He doesn't have a great track history with speaking in the stock market. So yeah, that's just one of those things. But once again, you know, I think he's been there now in the Fed for 2 years-ish, something, maybe 3 years. And yeah, every time he speaks, the stock market goes down. But once again, you know, you've seen the stock market since he has come in power. He might speak and it goes down a little bit, but over long term, you know, at the end of the day, Facebook, Apple, Google, Amazon, they're not bothered with these sort of things. You know, it's not going to affect their income and the share price, and their revenue profit will keep going up. So these are all just short-term things in my opinion. Now, the one that actually worries me a little bit, and this has always been in the back of my mind for the last kind of 12 months, is tax. This was one thing that kind of came out the other day that did kind of worry me a little bit, and I have been thinking about this. At the moment, they are looking at putting corporation tax up for a lot of companies. The thing is, if you take corporation tax away, obviously that will hurt the bottom line of a lot of companies. If it hurts the bottom line, obviously then the companies won't trade at such high valuations, or they'll go up to higher valuations and won't deserve to trade at it. The S&P will jump up in valuations. Also, if you have less free cash, that will probably lead to less dividends, less buybacks. So for me, the little rumour about business tax going up, I think is out of this list. Like, I'm not really bothered about any of this. This is the one that I am bothered about because I think it will affect companies. And yeah, I think that would be the only thing that I am worried about, and something that might happen in the next kind of 12, 24 months. That is one that I am keeping an eye out, because for me, any of this will not really affect Facebook, Google that much, but that is actually something that would really hit the bottom line straight away. So yeah, that's the only little one that I am worried about in the long term of things, really. But yeah, nothing to worry about just yet in my opinion, but I am just keeping it on the back of my mind. Now, realistically, like I said, these are all just short-term things, maybe apart from that one. But overall, you know, for me, little short-term things, are these things enough to cause a 20% dip in the stock market? No. And it's just, once again, you know, people looking for, when the stock market goes down, people look for something to kind of blame, and people were looking for a few things yesterday. And I think the fact that there were so many things rather than one thing kind of showed that we're just having a little bit of a break at the moment. There's not actually that one thing out there that's worrying us all. There's just a few things of like, oh, this is brewing in the background. Plus, we're extended at probably overvalued prices for a lot of stocks, or big market cap stocks, will take a break. And that's what happened. Yes, over the last kind of few days, what we've seen is this. Big caps, S&P 500. The S&P 500 has been on an unbelievable run. And I made a video about this a couple of weeks ago, I think it was. Basically saying the S&P 500, in my opinion, is at a tough point at the moment. We've gone up a lot over the last kind of 2 years, way more than what we normally do. And if you look at the S&P 500 P ratio, that is a lot higher than what it should be. So at the moment, in my opinion, what you have at the moment is big caps that do need to take a break from the stock market or going up, take a break going up, and the S&P, in my opinion, doesn't have that much upside at the moment because it needs valuations to catch up where they're at. In my opinion, I've always said the S&P 500 is going to take it will not be the S&P 500 of the last 2 years. In my opinion, the S&P has to have a break. It cannot keep going up how it is doing. So I think what we are starting to see is that coming in. We are starting to see the S&P 500 starting to run out of steam. And because it's run out of steam, people are trying to blame a lot of things, rather than just saying, look, the S&P 500 has had brilliant 2 years. It needs a break. It needs valuations to catch up. And it's same on the S&P 500 P ratio. It needs to catch up a little bit. And I think that's what's going on here. Now, the big disconnect that you have going on in the stock market at the moment is small caps. Small caps at the moment haven't really done anything since the start of this year. If you're in any sort of stocks like Corsair, Tattooed Chef, for example, you'll know a lot of small caps haven't done anything the start of this year. You look at the Russell 2000, it hasn't done anything this year. The S&P 600, is it 600 or 400? Hasn't done anything this year. And at the moment, you've had big caps that have gone up and need a break, and small caps haven't done anything at the moment. And in my opinion, is when the S&P 500 takes a break, which it looks like it is starting to do, a lot of that will rotate into small caps. Now, the thing is, what we had over the last few days is we haven't had that at the moment. What has happened is big caps have gone down and small caps have gone with it. But at some point, I think that small caps will be the better option, and that people will rotate into that. And that's why personally for me, I've not bought a big cap since the start of this year, I believe, and what I've been buying a lot of at the moment is a lot of small caps. Now, there does come a little bit of a risk. Small caps do have a little bit of a risk towards big caps, because what you have is, if you imagine you've got the S&P 500, the S&P 500 goes down 2%. What normally happens is big caps or individual stocks, you'll see them go down like 3 or 4%. And what you'll normally see is small caps will then go down probably 5 or 6%. There's a little bit more risk with small caps, but the big thing is small caps outperform big caps on the way up. So if you have a stock market or an S&P that goes up 1%, big caps might go up 2%, small caps go up 3 or 4%. And that's how it works. So normally the small caps have them a bit more risk, but when they do go down, they go down a lot more. But when the stock market goes up, small caps normally go up a bit more. Now, what you have recently is you've had big caps that keep going up and up and up. And what normally happens is small caps will go up with it and they'll actually outperform. That hasn't happened this year. And because of that, you have big caps at really big stretched over valuations, and small caps are still pretty undervalued really. And because we've had that disconnect over the last 12 months, my feeling is that big caps do stay the same, but small caps will catch them up and they will have a good year. Now, at the moment, like I said, big caps have been chilling for a little bit. Small caps are chilling now, but I think that change will happen sometime soon and that rotation will happen, and that's my kind of thoughts on it. So overall, like I say, there's a lot of push out there about a stock market crash, but I'm not too bothered. I think that we are just at a point where we are due a bit of a flattening in the S&P 500. People are trying to blame it on something. I just think it's just because we're stretched over valuations, but people are saying a lot of these things. And with big caps going like this, I think that's a fair thing. I think it's a fair thing for the S&P 500 to pretty much do nothing for the next kind of 6-12 months. My feeling at the moment is small caps. Small caps are haven't had the rise of the S&P 500 this year, and I think they're due that. And at the moment, they are kind of, big caps and small caps are staying in line with the S&P 500. But I think that when people get bored or look for the next chances, the small caps will be the one, and that's where people will rotate to. So hopefully the video is useful. Hopefully I covered like a few things with kind of making sure you're not getting drawn into a lot of people that are pushing an agenda for their own personal gain really. Also, some of the fears that are out there, like I said, there's only one that personally for me that I'm a little bit worried on, and also just the stock market in general, where I think valuations will lead us really in the next kind of 12 months. So yeah, I hope the video was useful anyway. Smash the like button. If you do want to see a Boohoo video, let me know in the comments as always. If you do want to join the Patreon where I post where I'm buying or selling companies, I have been buying a few companies. Link is in the description, and if you do want to start investing, there's some links to some brokers in the description like free trade. You also get a free share as well, and I will see you on the next video.